Have you ever wondered what happens when a country's income doesn't cover its expenses? Just like a household spending more than it earns? That's the case for Russia in 2025. Falling oil prices have led to a growing budget deficit, expected to reach 1.5% of GDP. Let's break this down simply. 1. What is a budget deficit? A budget deficit happens when a government spends more than it earns in revenue, like taxes or exports. To cover the shortfall, it borrows money. While some deficit is normal, a rising one can lead to inflation, higher taxes, or cuts to public services. 2. Why does Russia's budget rely so much on oil? Oil and gas revenues make up over 30% of Russia's budget. When oil prices drop, so do government earnings. In 2025, oil prices fell sharply, creating a major financial gap. 3. What's happening in 2025? Russia's 2025 budget was based on $70 per barrel oil, but prices have fallen to $60. That small change is significant, widening the deficit from 0.5% to 1.5% of GDP. Meanwhile, defense spending remains high due to the Ukraine conflict, limiting flexibility and increasing pressure to cut services or raise funds. 4. Why are oil prices falling? Higher supply. Producers like Saudi Arabia haven't cut output. Lower demand. Slower global growth and trade tensions reduce oil use. Geopolitical uncertainty. Sanctions and the Ukraine war affect energy markets. 5. The impact on Russia's economy. Falling oil income hits the economy hard. GDP growth is expected to slow to 1.6%, and inflation may hover around 7%. The ruble's strength lowers import costs but reduces oil earnings. Investor confidence is weakening, and ordinary Russians may face stagnant wages, higher prices, and fewer public services. 6. Government response and strategy. High interest rates. The central bank is keeping rates at 21% to fight inflation, though it slows borrowing and growth. Revising budget rules. Russia may change how oil profits are used. Growing reserves. The government wants to build up financial reserves and explore new revenue through tax reform and digital efficiency. 7. Long-term concerns. Russia must consider diversifying its economy. Over-reliance on oil makes it vulnerable, especially if prices stay low and global politics remain tense. 8. Can other countries learn from this? Absolutely. Russia's situation shows why economic diversification is vital. Countries like Norway have used oil wealth to build resilience through savings and green investment. 9. What does this mean for Russian citizens? Possible cuts to public services, persistent inflation and rising costs, slower wage growth, potential future tax increases. 10. Could things improve? Yes, a rise in oil prices, eased sanctions, or successful economic reforms could help. But for now, Russia is bracing for a financially challenging year. In summary, Russia's 2025 budget deficit highlights the risks of relying too heavily on oil. While the government is taking steps to manage the fallout, long-term stability will depend on how well it diversifies its economy. Final thought: if your main income drops suddenly, how would you adapt? That's the question Russia faces, and the world is watching for its answer. Bye-bye.